Well, good morning, everyone. Thomas Montgomery. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and such. We have two types of distribution partners. We have affiliates, and secondly, we have white label partners. So yesterday we had, I think, a real good training that we called our affiliate onboarding. So if you missed that, I encourage you to view that. And that provided, just as it suggests, how to get started as an affiliate. If you're a white label partner, it's a bit more involving. We have an onboarding email that we send you, and then we also set up a Dropbox with shared folders. Regardless if you're an affiliate or a white label partner, it is best practice to have a landing page. Now, we provide a landing page for free to affiliates, and it looks just like what is shown here on the screen. So we're going to go through and make sure that you're familiar with it. We made reference to it in yesterday's training. If you're a white label partner, then we would like to set up a similar page. However, it will be altered based upon your branding, because that's what a white label partner does. A white label partner goes out to the marketplace under their branding and contracts with the client directly. Affiliates just simply refer prospects in to us using their landing page. But let's spend a few minutes talking about the design and content of the landing page. So early on, what we want to do is provide them an opportunity for a brief overview video, and I won't play it now for you, but you can certainly listen to it directly on the site if you wish. And it's what we've learned is a lot of people won't read much in today's society. So providing a brief 3 to 5 minute overview that they can see and they can hear tends to resonate better with most people. And so we make that immediately available. Of course, we start out the page by clarifying what problem it is that you and I solve, and it's to get qualified for funding guaranteed. We quickly want to help them understand that there's no minimum credit score, no minimum time in business to qualify. And that's important because those are barriers that many entrepreneurs face. Either their credit's not good enough to get approved, or they haven't been in business long enough. Of course, as the name denotes, credit and funding program, we're taking a bundled approach, and we are clarifying that this is not a credit repair program. So that's the top of the page. Then immediately thereafter, we have the opportunity for them to engage. So while this may look static, it's actually dynamic. So what I mean by that is when you give someone your link, whether you're a white label partner or an affiliate, while this box may look the same, how it operates, how it records the transaction is much different. So as an affiliate, the fields in this box are all linked to our CRM. And so our database then knows that the lead came from you, and we even immediately send you notifications. So if you're an affiliate, you have a prospect that fills this out, we'll talk about what happens that you see, and then secondly, we'll talk about what happens for the prospect. So for you, once the prospect has filled out this information, hit the get started here, the system will immediately generate a notification email to you to let you know you have a new lead. Because just because someone fills out these 4 pieces, these 4 fields, it doesn't make them a client. It does enter them into the sales funnel, which I'll describe more fully in a moment, but it is the creation of a formal lead. If you are an affiliate, then on your page, when someone hits this, it will take them to the second step, which will allow them to accept the terms and conditions. Those terms and conditions are standardized for our direct clients. Conversely, if you're a white label partner, it's different. Then these fields will still be linked to you, but when the get started here button is pushed, they go to the next page and it will be your terms and conditions. Because again, as a white label partner, the client's contract with you and you set the pricing and the terms. See the difference? But this is dynamic. I know it just looks like a normal web form, but it's not. It actually records who the prospect is from. Now, if we have a prospect that fills this out, but and hits the get started here, but doesn't fill out step 2, not shown here, which is agreeing to the terms and conditions, then we have a drip marketing campaign that'll continue to reach out to them to help them move forward in the process. So if you have any questions on that, let me know. Now, this part of the page is really important for you to understand, because what it does is it describes what we do and how we do it. And this is the meat of the matter, right? Now, from the prospect's perspective, it's okay if they come in and maybe they don't watch the video and they just immediately fill this out and go enroll. That's okay. That's their option. They certainly are encouraged to learn more first, and then towards the bottom of the page, we'll go through this content together. So what we have here is specifically 3 paragraphs, and then we drill into the 3 C's. So we are going to help them get qualified for funding with better credit and more. And again, the name of the program is Credit and Funding, and that's important because at no charge, we're not selling credit repair. There's no cost. We're helping them improve their credit profile. That makes sense because that's a barrier for a lot of people, but the end result is they typically want the funding. So get qualified with funding, get qualified for funding with better credit and more. The key to getting approved, regardless if it's for a mortgage, car loan, business funding, or what have you, is based upon the 3 C's. So here we are educating them about the 3 C's. There's many individuals that want money, that maybe just flat out need money, but they overlook the fact that the key to getting funding is to being credible on paper. And what that means is based around the 3 C's: credit, cash flow, and collateral. So the 3C concept, which we'll talk more about here as we scroll down the page, is at the heart of what we do. And more importantly, it's irrefutable. I don't think that you could go to any college professor, any banker, any accountant, any attorney, any regulator that would argue that the 3 C's are at the core of being fundable. So the premise that you and I are operating off of isn't made up, it's not unrealistic, it's not manufactured, it's truth. And for some reason in our society, a lot of people don't know what you and I know, is that you can't just want funding, you have to qualify for it. And the qualifications are typically derived from the 3 C's. So we furthermore let them know that the credit and funding program provides a turnkey solution. So it's a bundled approach. That's why it's growing so quickly, is because we're helping clients with all 3 C's within the package, offered by a 501c3 nonprofit to help them become capital ready. Guaranteed results fast is the next paragraph. In less than a week, they'll start to see the benefits. And that's what we really need to focus on, is letting clients know that they're going to start seeing results. They're going to start seeing benefits quickly, because people want fast, simple, and free. That's what our society typically wants: fast, simple, and free. So you need to let them know how our program fits into that desire of fast, simple, and free. And then, as underlined here, and this is really a key sales point, is people pay for results, not promises. The compensation that you receive, and thus we receive, are based upon results. It's based upon helping clients get funding, and then they pay a performance fee. If you're a white label partner, you pick what that performance fee is. Of course, it needs to be in writing, and the client needs to agree to it. Our standard performance fee for our direct clients is 10%, which is very fair. All right, so let's talk about the 3 C's. And again, I think you may have gone through this some, but it's good and healthy and hopefully productive to reiterate what it is that you and I do to help clients get funding, because it's not so simple as them just wanting or needing funding. It's, do they qualify? Now, when a client comes in, we're gathering data to determine, are they credible in terms of credit, in terms of capacity, and in terms of collateral. We have some clients that come to us and they are credible across the 3 C's. Great. we're going to move right on into funding. But it's not unusual that we have clients that come in that are not credible in all 3 C's. And so that's what we help with. That's the purpose of the credit and funding program. So from a credit perspective, what we're going to do is address both negatives, what's technically called derogatories in the industry, and then also positives. So adding positive trade lines we call credit boost, blocking applicable negative items is called credit sweep. How much do we charge for the credit sweep? 0. How much do we charge for the credit boost? 0. Why is credit important? Because it's a reflection of how they paid their bills in the past. I have the pleasure of talking to clients and prospective clients a lot. That's the majority of what I do. And it could be helping any of you with any clients or prospects you have, or any of our direct clients. And it's bewildering. You know, people are people. And so sometimes I think people lie. I think sometimes people don't know what they don't know. But what you and I are going to do is manage by fact. So once the client has enrolled, we will be sending them the onboarding form, and the onboarding form has a link for the soft credit pull, no cost, no impact, no commitment. And then we can objectively look at their credit profile, because the truth is in the data. And if the credit profile is good to go, great, let's proceed. If it's not, then we can assist them with what? With a credit sweep and or credit boost, no cost. Any questions on the credit before we move to the next C? Because if you really understand the value proposition that we offer, hey, we're going to help you become credible enough on paper to get a minimum of $100,000 guaranteed, that's powerful. And you'll probably help a lot of people, and you'll probably make a lot of money. But if you can't or haven't assimilated that, then it's probably best for you to not talk to your prospects. Just drive them to your landing page and don't converse with them, because they're going to expect you to understand what it is that we do. And frankly, we have all these training videos and that, but really, if you just understand what's on your landing page, you should know enough to answer 95% of the questions that a prospect might have. Anyone have questions on the credit? Okay, so Charles has a good question. On the credit, if there's multiple business owners, we're only providing at no cost the credit sweep and credit boost. So that's an important point. So let's say it's husband and wife, or business and 5 different business partners, or 10 different partners, or 20 different partners. That's a great point, Charles. We're providing the free credit improvement on one person. Typically it's the majority owner, however they could decide. Now, if the spouse wants the other spouse to get involved, or other business owners, we can help them with this process, but this is built around helping one owner improve their credit. Thank you for pointing that out, Charles. Okay, any other questions on the credit? And as Timothy mentioned, yeah, it's absolutely a legal, ethical approach. We've gone through an analysis by the Federal Trade Commission. They looked at how we do this and deemed it appropriate. There's no fines, no requests for changes, obviously no cease and desist. There are some credit programs in the marketplace that are not legal, not compliant. Some people go to jail for running inappropriate types of credit programs. You and I are steering clear of anything that's gray, anything that's not appropriate. So no worries there. All right, so let's get to the next C. The next C is capacity. We describe capacity, which is commonly referred to as cash flow, as it impacts your borrowing limits. So I'll give you a quick example, and maybe this is not the best one, but let's say you need a new car. And let's say that you make $36,000 a year. Even if you got great credit, how much of a car payment, how big of a car note, how big of a loan you can afford is going to obviously be impacted by your capacity, your cash flow, how much money you have left at the end of the month to pay that car payment. I think that makes sense, right? So would you rather make $36,000 a year or 360,000 a year? Well, 360,000 a year is going to give you the ability to buy a much more expensive car, or in general, get a larger loan, whether it be a mortgage, business loan, or what have you. Now, capacity, I understand, can be from the individual and or from the business. Here, we're talking about getting the business owner credible, and then also we'll be working on the business. But here we're talking about the business owner, the person. So what we do to help with capacity is huge. And I was just talking to one of our white label partners this morning. His name is Neville. We've got a client together. Well, he's got a client that we're helping with through our program. Her name is Gail. And so Gail is wanting to proceed with funding, but capacity is her issue. It's not credit. It's not collateral, which we'll talk about in a moment, but it's capacity. So we help clients create legally and ethically the verifiable income necessary to qualify for funding and or qualify for more funding, because Gail doesn't make much now. Her income is small enough. It's 50, 60,000 a year. She has limited borrowing capacity. But what we're going to do is flip that over, make that about 250, 275,000 a year. And now she has lots of borrowing capacity. So we can help clients by income verification and improve cash flow. Again, I'll reiterate that what we do is legal and ethical. So what we're doing is not going to put you in harm's way, the clients in harm's way, or ourselves. I've certainly seen, I've read, I've reviewed court cases of some businesses that don't do this legally and ethically, and they can get in trouble. They can go to jail because it's bank fraud. You and I are not going to commit bank fraud. You and I are not going to do anything that's illegal nor even gray. So when we're helping clients with capacity, we're doing it the right way. Any questions on capacity, the second C? Now, I know you may be thinking, it's like, damn, this is a lot, right? Well, my clients or people I refer, they just want funding. But what you have to understand is first of all, you don't just get funding, you have to qualify for it. And then secondly, there's someone on the other side of the transaction, the lender. And who do lenders want to loan money to? People that they think will pay back. Well, how do they go about determining if that person will pay back, what the risk is to them, to the lender? Because that's what they care about. Well, they're going to look at credit of the borrower. Have they paid their bills in the past as agreed? Well, you and I can fix that if that's not been the case. Capacity, do they have the money? Does the borrower have the money to pay it back? I mean, that's a pretty reasonable request, right? And so you and I can fix that. And then, of course, collateral, which we'll get to in a moment. So 3 C's. Now, it's true not all sources of capital have the same requirements. Can we go get funding off of just capacity? The truth is yes, that there are some sources of capital that will not look at credit, that will not look at collateral, that'll look at just capacity. There's some that will look at just collateral, certain types of collateral, and there are some that look only at credit. But now we're taking this broad set of lenders and looking for very special, unique circumstances, which certainly can occur. But in general, what you and I should do as technical advisors is help clients, which is what we promise to do and what we will do, improve all 3 C's. Why? Because they're going to have access to more types of capital, typically more amounts of funding, and typically at better terms. Make sense? Okay, and then on the collateral side, we can see the description. These are the assets that you own that impacts your net worth and credibility. So it's what can be pledged to the lender that in case the loan's not repaid, that they have some way to mitigate the risk. So anytime I'm working with a client, I do this, and I just plead with you, if you're going to talk to the clients, which you don't have to, you can just feed them through the system. But if you're going to talk to the client, ask them to pause for a moment, step out of their shoes and look at this from the other side of the transaction. And then any logical person could say, well, that makes sense. Yeah, the lender would care about my credit because that shows if I paid my bills as promised before. They care about my cash flow, my capacity. Can I afford it? And they care about collateral of what am I pledging that in case I don't repay it, that they can collect, that they can mitigate the risk. So with collateral, we do something very, I think what we do across the board is innovative, but this is a game changer here. If you pause to understand this, this is so significant. We add real receivables to the client's financial statement. Well, why would we do that? You know, they just want a loan. Why are we doing this? Well, because many lenders want to see collateral. And so by adding real receivables, it provides the collateral on paper and then also improves their liquidity. And also then we can help them liquidate the receivables to create more income, which of course contributes to the business's capacity. This is a loan without argument, without dispute. This is a $10,000 value alone just in this column. Because what you could do is you could say, well, how much is this worth? Well, credit, we're doing it for free, but if people were to go out and pay for a similar approach to credit, let's just minimize it and say, oh, they'd pay probably $1,000. So this column will conservatively say is worth $1,000. Capacity, a little harder to put a dollar figure on it because it's more intellectual capital. It's teaching people how to do it. Let's just say this has no value for whatever reason, because it's hard to put a dollar amount on. So we're providing about $1,000 of value here. How much are we providing here? Again, literally $10,000, literally. So between the three, at minimum, you could say that we're bringing them $11,000 of value. And in their case, they're paying us, other than the setup fee, they're paying us, you and I, after they get funded. It's a remarkably fair deal. Now, once in a while, I'll have someone that'll come because, you know, there is a setup fee, right? There's a setup fee. Why do we charge a setup fee? Because we got to pay you and we've got to be able to provide these services. So once in a while, I had a client yesterday, and he's one of those individuals that you could tell he thinks he's smarter than he probably is. I'm sure he's smarter than me. I'm not disputing that. But you could tell he kind of thought he was big shit. So anyway, he's like, well, I don't want that setup fee. I don't want that setup fee. Guy's name's Ridge, R-I-D-G-E, Ridge. And I call him by his last name, but I'll leave that out of this conversation. I said, Ridge, I understand. I tell you what I'll do. I'll work a deal with you, Ridge. If you're credible from the get-go, if you don't need any of our help with the 3 C's, tell you what, we'll defer that setup fee until after funding. How does that sound? And you could hear crickets drop, because he was smart enough, or he is smart enough to know he doesn't look good on paper. He probably wouldn't even be reaching out to us, right? He called like 3 times in one day until we called him back. So clients just need to have a realistic expectation. If they want a person or a group of people like you and I, technical advisors, to help them, sure, we're fine with getting paid off of the capital raise. That's your and my pleasure. So clients are benefiting and then you and I benefit. That's perfectly fine. But it's probably ridiculous for the Ridges of the world to think, okay, then the technical advisors should incur all the cost to get my credit better, to set up my capacity. And yeah, you better damn well give me some assets for collateral. All that should be for free. I mean, that's ridiculous, right? And so part of it is educating the prospect on what it is that we do, why it's important, how it works. And again, we're taking the risk. We're guaranteeing, as you can see here, $100,000 in funding. But the funding occurs, it's generated based upon qualifying for it. And that's where the 3 C's come into play. Timothy's asking about how much the setup fee is. If you are a white label partner, you determine what the refundable setup fee is. If you're an affiliate and a client's coming through our internal process or our direct client basis, then we have a one-time refundable setup fee of $999.99. So we can help the client look for third-party financing for that if they don't want to pay out of pocket, or they can pay out of pocket. But again, I don't think it's right or reasonable for clients to come in and expect us, meaning you and I, the technical advisors, to do a whole lot of work, provide a whole lot of value, and that should just be our responsibility? Hell no, it's not our responsibility. He's the one that screwed up his credit. He's the one that doesn't have enough capacity. He's the one that has inadequate collateral. So all we're asking with the setup fee is let's just cover our hard costs. We're not making any profit off of this. And part of this is being paid out to you. I mean, that gives you your upfront bonus. You can't convince me, because some people will have the argument, well, if you're doing funding, you shouldn't have to charge anything up front. And I turn that around and I say, that's right. If you are credible, then we don't need to charge anything up front. But if you're not credible, there's work that needs to be done, most likely on these 3 C's. And it's just not our job to subsidize it, right? This is not a welfare program. Alternatively, you'll have some people that come to you and say, well, I don't have the money for the setup fee. I want to do this, but I don't have the money for the setup fee. Not a problem. Then what do? You plug them in as a partner. They can become a referral partner. They make on average around $3,000 for referring each person in. They make a $100 bonus, 3% of the capital raise. If you're the one that brought them in, you get an override. We're not MLM or network marketing, but we pay 3 levels deep on the affiliate. Great. You're broke. Let's fix that. Because you'll have some people that come to you and the real problem is they're just broke. It's not that they need funding to start or grow a business. You'll have some people, as this page slowly refreshes, they're just stone cold broke. Well, then let's fix that. Become a partner. Oh, no, I don't want to be an affiliate. Okay, great. What else are you doing to be unbroke, right? Because typically borrowing money to become unbroke is a difficult proposition. Possible, but difficult. Because if you're broke, then what does that mean? Chances are, over on the credit and funding, we've got a capacity issue, and we're going to have to fix that anyway. Brian asked a good question. We offer him the finance option for the setup fee. No, in Ridge's perspective, if there was any setup fee, any cost, then he was out of it. And again, so Brian, my response to him was, as I stated before, hey, Ridge, if you're credible, and I bet you are credible, the way you carry yourself, I bet you're ready to go to funding. So I said, Ridge, tell you what, we will defer the setup fee if you're credit worthy, if you've got the capacity, if you got the collateral. If you don't need our help on the 3 C's, let's go make it happen. Now, I don't think he was credible and he didn't sign up, so I can't validate it or invalidate it. But people that want free are probably unrealistic. And so the setup fee does a couple things for us. Number one, it allows us to pay you as the affiliate. Number two, it offsets our cost of getting the 3 C's in order, or at least part of the cost. I mean, they're certainly not paying $10,000. And also they have some skin in the game. People that have some skin in the game are much more likely to stick with it and complete the process. All right. Carlos, it looks like you have a question. And Carlos's question is payouts. Yes. So as there's 2 different answers to these comp questions. Are you an affiliate or a white label partner? Carlos, I believe, is an affiliate. So there's two rounds of payout for our affiliates. And so you'll see that as you go through the enrollment process over here, but we pay $100 upfront sign-on bonus, essentially. So once a client has enrolled and paid their setup fee, then bam, we wire you the $100 the next day. Then the balance, and so that's where we're talking about daily payouts. And then the overrides is, of course, as the client raises capital, we've guaranteed them $100,000. Your contract with us guarantees you 3%, Carlos. So you're getting $3,000 of every $100,000 capital raise they have. So if they raise $200,000, then you're getting $6,000 and so forth. So the upfront is paid daily. We work with JP Morgan Chase. We're set up to do ACHs and wires, and we sent out. Well, I know one gentleman yesterday, we sent him $6,000 6,000. I don't remember the change. I'm going to say $6,300 was his daily payout yesterday. Wired to him, same day, wire. Sent it in the morning, confirmed he had it before the end of the day. So our top guy yesterday made $6,300 one day. But anyway, that answers Carlos's question. So wrapping it up for today, what I wanted to do is to go back and just reflect on the credit and funding program page for a couple reasons, and I'll wrap this up. Number one, this is the landing page that will provide you for free as an affiliate. Everything will be linked to you, so you need to be familiar with what's on it to be confident and competent in what we do. And then if you're a white label partner, we will set up a page like this, but it'll be edited for you with your branding. We can put your video. It'll link to your terms and conditions. Do you have to have a landing page if you're a white label partner? No, but it's best practice because this allows it to be very easy for clients to enroll. I mean, they go to your landing page, they fill this out, they click get started, takes them to step 2. They're allowed then to accept terms and conditions, and bam, you got yourself a client. You want to make it simple. People want free, simple, and easy. Get as close as you can to free, simple, and easy. Any other questions before we wrap it up today? All right. Well, thanks, everyone. We'll see you back tomorrow morning. Have a great day. Bye-bye.